Hello, it's MrELoans.com, bringing you some information about the best refinance rates in Chula Vista. Now, the best rates are interest rates that are given by banks to borrowers looking to remortgage their home. Every borrower wants the best refinance rates, but it can be a little bit tricky when trying to obtain them. The first thing a borrower needs to understand is just because a bank is advertising an interest rate doesn't mean that the borrower will qualify for it. Many borrowers quickly realize after speaking with a loan officer that they do not qualify for the interest rate that is being advertised. It is usually best to read the fine print and shop around from bank to bank to ensure that you are getting the best refinance rate. The best rates are dictated by multiple factors. Each loan program a bank offers has different qualifying criteria. Now, we're going to cover just a few of these main qualifying factors when trying to obtain the best rates possible. The first thing is credit score. Almost every loan's interest rate is dictated by the borrower's credit score. When a bank advertises a special rate, in their fine print they generally mention a minimum credit score needed to qualify. In today's market, to get a conforming loan, most borrowers will need to have a credit score of 740 or higher. Now this can vary from lender to lender. It might be a little bit more and it might be a little bit less. The next factor for dictating if a borrower qualifies for a low interest rate is equity in the property. Banks providing borrowers with conforming loans like to only lend up to 80% of the home's appraised value. For example, if you owed $100,000 on your home, the new loan amount financed cannot exceed $80,000. If your new loan amount is higher than $80,000, you would be required to come up with that money to bring the new loan down below 80% of the home's value. Now, one of the last factors to determine if a borrower qualifies for low interest rates is debt obligations. The bank wants to make sure that you can afford your new monthly mortgage payment and your other debt obligations. To determine if you qualify, the bank will divide all of your monthly bills, including your new mortgage payment, by your monthly income. This gives the bank the borrower's debt-to-income ratio. Your ratio cannot exceed the bank's loan program guidelines. Keep in mind, each bank and each loan program have different qualifying debt-to-income ratios. Now, we just covered a few different factors that are going to determine if you would qualify for the best interest rates available. Now, if you have additional questions, be sure to visit our website at MrELoans.com.